Chance of gold crypto investing and elaborating on what we were talking about for the last few days and the last half a year to a year that crypto regulations was coming and the United States government wasn't going to not regulate the cryptos as they lead into uh, making a Fed dollar coin, right? And this is starting to happen now as there's been a lot of liquidations and whatnot going on in the coin field. And when you have companies going insolvent, people losing billions of dollars on exchanges and lending platforms, and coins going to zero, it gives a perfect time for the United States to start their little regulatory hoopla and circus, right? US, every crypto exchange and Binance is being investigated by the SEC, says Senator Loomis Staffer. That apparently is her. Widely criticized circulated report that the U.S. Security and Exchange Commission, and this is from Forbes, Hans Gruber heard it in Forbes, so you know it's true, right? When you hear Hans Gruber in Forbes, you know that it's got to be true. And the Securities Exchange Commission (SEC) is investigating 20 billion crypto exchanges. Coinbase are just the tip of the iceberg, according to the staffer from U.S. Senator Kathleen Lumens, Republican, Wyoming is where she's from. Kathleen, the staffer says every U.S. Crypto exchange and the largest crypto exchanges in the world, Binance, are in various stages of being investigated. And what that's going to also produce is everyone that was trading on these sites that didn't pay taxes. The IRS is eventually down the line in the next few years. If you made any kind of substantial money, they're going to be sending you a big bill, right? In various stages of being investigated. There are more than 40 U.S. cryptocurrency exchanges, according to crypto data site CoinGecko. The SEC has not responded to multiple requests for comment, and the fleece heisters and shysters out there will tell you that this is bullish for Bitcoin, that this is going to lead the next bull market by having all this regulatory scrutiny and all this nonsense. When 5 years ago, when the government wasn't talking about it and reporting on it in Forbes, they were saying that's one of the most bullish things out there is that the government can't regulate, the government can't uh, ban it, the government can't do anything to crypto. But now that they are doing it because they were just spewing out gobbledygook back then, right now they're trying to change their tune that this is good for Bitcoin, right? It's not good for Bitcoin. Just like it's not good for the stocks and the commodities markets. Every time they put new regulations in there, it makes it harder and harder for the retail investor to trade because they're rigging the markets. Coming in the wake of a number of SEC actions asserting the regulators' domain over the crypto industry, and equally strong response by the U.S. Commodity Futures Trading CFTC, pushing back against what it characterizes as a regulation through enforcement. The staffer says the SEC urgently wants to resolve its dispute with the CFTC over crypto jurisdiction. If the matter isn't resolved internally, he says legislators would have to get involved, and the Congress is likely to side with the CFTC. In 2014, long before Ethereum and pretty much any cryptocurrency other than Bitcoin and its early copycats existed, the CFTC asserted its jurisdiction over what it then called virtual currency. Then in 2008, the federal court ruled that the CFTC could prosecute fraud cases involving virtual currency. According to the CFTC statement, similarly, the SEC has multiple times asserted that Bitcoin is a commodity. And in June 2018, the SEC Director William Hickman, it's kind of a funny name, Hidman, said in a speech that he didn't think Ethereum was a security, implying it might properly be under the CFTC jurisdiction, right? So this is some breaking news here. It's not really breaking news for my audience. It's just news getting validated that we already thought and that we've been talking about. That Debbie Stabenow, this charlatan out of Michigan, the chairwoman, she's been in that position as long as I've been alive. And some other old man, Levin something scumbag, don't like him. So this is going to continue to happen as the cryptos continue to go into a bear market. And on the flip side of this major recession that we're in an inflationary depression, you're going to have the central bank digital currency that I call it, the Fed dollar coin, right? Because that's what it's going to be. And that's going to be how you start to transact and payments. Cash, physical cash will be gone. And the Fed dollar coin will be in. And they're not going to want any of these other cryptos. People, they're going to have to know who's trading in these cryptos now because that's how all the payments are going to be. When you buy things, it's going to be with your Fed dollar coin card, right? And they're going to have to know who's moving this other money around because the technology to start paying and all this other stuff will be there. So they're going to have to harshly regulate it. And they're going to essentially stifle what was so great about the early use of crypto, right? Is the free movement of money. They're going to tighten that up and make it even more traceable than the Fed dollar coin that they come out with, right? And we'll see how that all plays out. But you can see the Bitcoin price right now is still sitting on top of this major upper resist or lower support. This is a bear flag that we're in, and you can see I've went over this at nauseum. If we go to the daily time frame, you can see we've had several bear flags. Am I on the wrong chart? No, it's just having problems loading up. Come on, hold on, hold on, audience. See, that's the Forbes article. Hans Gruber in Forbes. Come on, you piece of crap. There we go. There's the beautiful chart. Go out to the daily time frame. So you can see, oh, come on, this is painfully slow today. Let's let it load up. Come on, what's going on here? There it is. Good job, T-Mobile. You can see we have our multiple areas with our volume indicator from the swing low at 3,600 to this first mountain double top. And if you know my longtime followers, and this is a good little rundown for my new followers, if we take this, nah, we'll just leave that for the, it doesn't matter. So, but if we look at this, you can see we had our big blow off top, our consolidation. And actually what we need to do here while we're talking about this is we're going to take this, going, come on, we're going to hide that right now, right? And then we're going to hide this. There we go, make this clear. See this? Now the chart looks much better. And then we're going to take this white support box, if it'll let me click it, but it's always painfully difficult to do. And you can see it just, well, there it goes. Fade that into the background. And you can see here, old Vincenzo was telling you in this, when we had this blow off top, right, that this was a bear market rally. In the bear market, a multi-year bear market started here, right? And this is just a trip down memory lane. Then we came and consolidated down, and we told you I thought this could break to the upside in a bear market rally because from the current time with our industry exclusive measuring tool from its first high about 64,169 down to its swing low, it was down about 54.61%. And that was a perfect time for a bear market rally. And a bear market rally is usually ferocious. And people think that it's the turning point and turns into another bull market, right? So old Vincenzo thought it was going to come right up into this blue ring right here, which was the old major support where a bunch of people were trapped, right? And usually that's where it gets rejected. And I had forecasted about a 50 to 60% pump, right? And then when it came up to here, I thought that it overshot it a little bit right here. And when it started coming down, I was waiting for the confirmation down below the 200 in the daily. It didn't do it because I thought this was the classic area based on this fib circle right here. You can see it in the background. If we can click on it real quick, we'll make it a different color. Come on. It just never will allow you to do something simple. There it is. We'll do it a different color to where you can see it better. And that's where I thought it would get topped out on the top of this green fib circle because all these people were trapped in a land of despair and there was a lot of trading up there. There was a lot of big money getting left up there to get fleece heisted and shisted. And it gave these people a rare second chance on this final blow off top. But like I told you, and the reason I keep that here is that when it broke this uptrending rising wedge, that was the start of the multi-year bear market, right? And this was just one big bear market rally that I had forecasted down into this falling channel down here on a breakout to the upside. I just thought it was going to get topped out here. And like the markets always do, they overshoot a little bit and then it came up and trapped all kinds of people. Nobody over here on this once in a lifetime opportunity to get out on something that they bought above $46,000, and a lot of people bought it up here at 55 and 65,000. Once in a lifetime chance after a 50% flush, and that's major money being lost to get it back up here. And what they do, they bought more and they tripled down up here, thinking we were going to the moon, baby, going to 100,000, all in this consolidation. And now they're really getting fleece heisted and shisted because you can see the price is way down. And I said, quote, multi-year bear market. I shared a couple videos from yesterday. Check those out. Very powerful, educational, knowledge-filled, fact-based uh, information in there. But I said this was a multi-year bear market, and this has only been 473 days, so about a year and a half so far. So we got at least another year of this painful, painful bear market. And you can see what we forecasted when it was up here after we seen the mountain double top. We said this is a mountain double top, and this is one of the most bearish macro formations you can get is a mountain double top, blow off top one, crash, big bear market rally, formed a, even though it technically breached the old all-time high barely, it forms a perfect mountain double top or M topping reversal pattern. I prefer to call it the mountain double top. You could draw sun rising and setting into the abyss in between them, and you take it from the top to what the neckline would be, support, 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 support over here. This would be your neckline right there, which actually lined up beautifully with that white bottom at 30,000. And the way you do a targeted move on this is from the top to the bottom to the point of a breakout. And that got you all the way down here to the $13,369 range. And that's how old Vincenzo came out with that target, 13,336, when the price of Bitcoin was at 63,000 and rising, right? That's how I came up with that based on the mountain double top, right? You see that? And you can watch all those videos from back here, all of them on the whole way up here back in from where is that at? I always put that in the wrong spot. Get over there. Back here in October of 2021, November, December, January, February, March. I was telling you this was a mountain double top, and the target would be by the end of 2022, way down there, right? And that's how I diagnosed, sniffed out, and detected that. See that? And then we had the midway consolidation and a bear flag, right? Bear flag one. And then how you do a technical target from there is you go from the top of the flag to the bottom of the pole to the point of the breakout, and that got you right down to your next consolidation about the midway point to our overall technical target. And then we had a little smaller bear flag here, right? And then it broke down, and another much little bit larger bear flag here, and this too will eventually break down, and that technical target gets you right down here to the 13,900, right into our slot, right into our target that we had from way back in the abyss when the price was up there and it's mountain double top, right? And that gets you right down into there, and that's what we're still waiting on, and that's what we're watching out for. but these can always do a little fake out first, right? And that's why we've had this overhead target up here since this started to show its true self down in this range that we thought it could get up there, right? It hasn't yet. It's struggling here. And what we're watching for in the immediate short term today in the micro pattern is kind of to hold above, see how it came down on this lower support right here earlier today when the volume came back in. It held it and then it came back up. Now, when it comes back down, if it can't hold this and form a double bottom and breach this old area, if it comes down here and struggles and comes through, that's what I've been thinking is going to happen the last few days, where you have to come back down, even if you are to break up soon or to go up one more time. You might have to come back down and retest